Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about if investors should be investing into the stock market right now, and what Warren Buffett has to say about this. And then after we discuss whether or not investors should be buying stocks right now, we will be going over two of my favorite stocks by comparing and contrasting them, and that is going to be Amazon stock versus Alphabet stock. You know from past videos that I love both of these companies, so I will be telling you which one is my personal favorite to buy between these two behemoths, and why I am very excited regarding where the stock market could be over the next year. For more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below about where you think the stock market is headed, subscribe if you are new, and without further ado, let's jump right into today's stories. So the first article we will be analyzing is, should you invest into the stock market right now as an investor? And of course, we'll also be going over what Warren Buffett has to say about the current stock market environment. If you didn't know, it's generally agreed upon by professional investors that as long as you hold very solid companies which are large cap and you're willing to hold this company for the long term, it's one of the best ways to build wealth overall. However, with the recent developments in the macroeconomic economy, such as very high inflation, soaring interest rates, as well as us being in a bear market right now, how could we possibly try to invest into the market and make money? Well, it's no surprise, with each and every bear market, eventually it will give way to a new and improved bull market. So a bear market is when the overall stock market is headed downwards by a pretty substantial margin, and a bull market is when it's trending upwards by a pretty substantial margin. And if you're familiar with Warren Buffett, who is one of the most world-renowned investors, who is also the CEO of Berkshire Hathaway, which is another company I absolutely love, and I own a load of their stock, he says that right now the market is a prime investing opportunity. So essentially he's saying for investors to continuously invest into ETFs like VOO or VTI. These are phenomenal investments and they make up the core of my personal portfolio. However, there are some good mutual funds such as VFIX and other ones like that that track the S&P 500 or the broader stock market, which will also be extremely beneficial for you. Warren Buffett once wrote, and I quote, "The financial world is a mess. Its problems, moreover, have been leaking into the general economy, and the leaks are now turning into a gusher. In the near term, unemployment will rise, business activity will falter, and headlines will continue to be scary." Now, you might be surprised to find out that Warren Buffett actually wrote this at the height of the gigantic recession that we had back in 2008 and that whole financial crisis. However, later it actually gave way to one of the longest lasting and most lucrative bull markets in history. As you can see on screen on this chart graph here, you can see that investors, if they invested into the S&P 500, would have literally 4x'd their money, making their investments quadruple by 400%, and that's absolutely phenomenal. So even when times are bleak and scary, clearly investing during that time eventually led to a very powerful bull market where people made loads of money. So right now is one of the best times to invest into the overall stock market, and that's what I am doing right now. For instance, Warren Buffett also uses an example of going into your favorite store where everything is regularly priced, but then we go in next week and everything is cheaper. We go in the week after that and things are even cheaper. We go in the week after that and it gets even cheaper. So why not buy up all of this stuff while it's cheap? And it goes the same for the overall stock market. Why are you scared to invest into the overall stock market while it's falling? Now, I understand why you may not want to buy individual stocks, but by investing into an index like the S&P 500, it's a very safe bet which will pay off very lucratively in the future. Warren Buffett goes on to say, and I quote, "Let me be clear on one point. I can't predict the short-term movement of the stock market. I haven't the faintest idea as to whether stocks will be higher or lower a month or a year from now. What is likely, however, is that the market will move higher, perhaps substantially so, well before either sentiment or the economy turns up. So if you wait for the robins, spring will be over." Essentially, he's saying that although you can't predict short-term patterns in the stock market, the overall macro pattern for the stock market is extremely positive. So if you invest while the stock market is down, that is going to pay you major dividends once it rebounds. So it begs the question, is right now a good time to buy into the overall stock market? And I would say it's a resounding yes from both me and Warren Buffett. While it might seem counterintuitive at first to buy into the market while it's falling, actually this is one of the best strategies, particularly if you are dollar cost averaging into the stock market. This will lead to unprecedented stock market gains, and if you are a long-term index ETF or mutual fund investor such as myself, this is going to be how you are going to build wealth. Warren Buffett also suggests that although right now is the best time to buy, you need to be able to consistently buy even while the prices fall further. Essentially, he's saying, don't get scared. There's a very well-known quote from Warren Buffett which says, "Be fearful when others are greedy, and be greedy when others are fearful." Essentially, he's saying while the stock market is going up, you may want to tone back some of your investing because these stocks and companies are going to be overvalued. However, in the reverse way, when people are being scared instead of being greedy while the stock market is falling, this is when you get your favorite companies at very cheap valuations and cheaper stock prices. Furthermore, many investors that are sitting on the sideline with cash right now aren't doing something that's very smart. If you have disposable cash on hand right now, feel free to keep some for an emergency fund or a rainy day fund, but the rest of that you could be dollar cost averaging into the overall stock market, which is going to lead you to long-term success over the next decade or even further out. Now, clearly the market could fall further in the short term, and not everyone is in a position to where they can invest right now, considering higher inflation rates, increasing interest rates, as well as people struggling for daily essentials such as food and gas because those prices are going up due to inflation. But if you have some disposable income, feel free to dollar cost average into a very well-known large cap ETF or index. Go in and invest into the S&P 500, the Dow Jones, or the NASDAQ 100 because it's going to make you wealthy over the long term according to historical statistics. We have to remember that the market sentiment can turn on a dime, and as history suggests, the people who invest while the stock market is falling are better off over the long term. And that's why right now, I believe that this is one of the best time to invest into ETFs, index funds, and mutual funds. Now, if you want to invest into singular stocks, make sure those stocks are very well-known, established companies that are going to be here for the next 100 years. And two of my favorite companies to invest into is going to be Apple stock and Alphabet stock. I've talked about both of these stocks and how much I own in previous videos, and trust me, it's a lot because I really like these companies. However, if we compare these companies and contrast them, which one is the better buying opportunity if I only have enough money to buy into one? Well, first let's start off that both Amazon and Alphabet have lost a fair amount of value over the last year since January, between 40 and 50% respectively between these two. However, Amazon and Alphabet continue to be market leaders involved in extremely lucrative and rapidly growing industries, so their long-term outlook is extremely promising. Both of these stocks are great picks and amazing buying opportunities that I think should be in the majority of people's portfolios. However, if you could only pick one, let's discuss which one is better. Let's start off by analyzing Amazon, which owns a plethora of various subsidiaries, but they're most known for their e-commerce business. Now, what I like about Amazon is when the overall economy shifted, Amazon responded quickly to their losses, and they started to cut and let go around 10,000 corporate employees. They closed or canceled dozens of warehouses, and they shut down many of their projects, including a healthcare startup called Amazon Care. Right now, the AMZN share price trades for $84.94, while professionals think this company could fall either to $80 or below, or potentially could surge up to $232 over the next year. This company is a gigantic e-commerce platform, and many investors believe that 2023 will be a great time for the company as long as the economic climate changes for the better. Amazon's diverse business comes in handy during times of stock market downtrends because, again, they have multiple subsidiaries underneath their overall umbrella. But the one I like the best is actually their cloud computing service called Amazon Web Services, also known as AWS. AWS has held a leading 34% market share as of quarter 3 of 2022, and this has led to amazing revenue increase of around 27% year over year to $20.5 billion and operating income of $5.4 billion. Clearly, their cloud computing segment is bringing in the big bucks for this company, and it still has a long way to go. For instance, the overall industry of cloud computing is worth around $368.97 billion, and it's growing at a rate of around 15.7% from now until 2030, which means that if Amazon could just hold on to their current market share, this company is going to be super rich because of this. So an investment in Amazon is no doubt a fantastic long-term investment that could pay off handsomely in the future. But now that brings us to Alphabet. Alphabet has also been hit very hard due to rising interest rates and higher inflation, and they've been affected negatively because they make a lot of their revenues from advertising, digital advertising to be exact, across their three main platforms, which would be Google, YouTube, and Android. To put this into perspective, around 80% of Alphabet's revenues come from advertising. And because we are in an interesting economic environment right now, their overall advertising revenues have decreased. But for the third quarter of 2022, their revenue still increased by around 6% year over year to $69 billion, with operating income hitting around $17.1 billion. Meanwhile, Google also has a cloud segment just like Amazon's AWS. Except Google Cloud is increasing and growing by around 37.6% to $6.8 billion. So clearly, there is a long runway for further growth in this particular segment of their business. The current share price trades for just $88.26, while professionals believe this company is extremely undervalued. At minimum, it should be around $115 over the next 12 months, but could surge to $160 over the next year. When we compare Alphabet and Amazon more directly, we can clearly see that Alphabet has superior free cash flow, which stood at around $62.5 billion as of September 30th, when compared to Amazon, who clearly did not fare as well. But there is a more stark contrast. For instance, let's look into their accounting ratios. And their accounting ratios will tell us which one is a better buying opportunity, which of these investments give us more bang for our buck. So when we compare their price to earnings ratios, Amazon's PE ratio currently comes in at around a 77x multiple, while on the other hand, we have Alphabet, which is trading at around an 18 PE ratio or an 18 times multiple. So Alphabet gives us considerably more value for our investment. Now, don't get me wrong, Amazon is a fantastic company to buy and hold for the very, very long term. But in terms of value, Alphabet is undeniably the better buying opportunity right now. So that's why I own more Alphabet than Amazon, but both of them make up a substantial part of my core portfolio on top of VOO, VTI, SCHD, and QQQ. Those are all ETFs that I just mentioned. So if you want more videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.